Hello everyone and welcome to this month's webinar. Today we're going back to an old one I did previously. It's on how to start a self-managed superannuation fund. This has been updated, so hopefully you get a little bit more information out of this one. Before we get started, just a disclaimer to make sure you get your own independent and legal advice before you do anything too crazy. In particular, tax agents, we're not allowed to give financial advice. Even the mere fact of suggesting to someone to set up a self-managed super fund is actually giving retirement or financial advice. So we can't even do that. But if someone comes to us and say, Derek, I want to set up a self-managed super fund, we can obviously help them out. That's me. I'm Derek Nolan. I'm the owner of 12 Chartered Accountants. Been doing these videos for a long time now, so make sure you check out all the other ones I've done. So like I said, we're going back over old ground. Now, I did a video a few years ago now on how to set up a self-managed super fund. So I'm not going to go back through the ground I covered on that one, particularly the detail about, why trustees need to be put in place and who should have trustees and things like that. I'm just going to sort of briefly go over that. So what is a self-managed super fund? Well, basically, everyone understands what superannuation is. It's retirement money put aside. It's normally managed by big superannuation funds. And when you're 60 or 65, you can access that to basically retire on. What a self-managed super fund is that you can actually take the money away from the big fund managers and look after it yourself. So that's why it's called self-managed. It's like your own personal superannuation fund. It can be grouped with a number of other people. I think you have up to 6 members in a self-managed super fund. But we'll go through a few more details as we go through. Most do-it-yourself investors like this type of thing. They think they can do better than the fund managers. And that's probably the main. What I find is there's probably 2 reasons why people set up self-managed super funds. One is they actually believe they're a better investor than the fund managers. Now, fund managers, they charge a lot of fees for what they do. So that's probably the main reason people look at set up a self-managed super fund, is to reduce their fees. And they think they can sort of do the same sort of investments. That's sort of the main thing. The other thing is that they're looking at setting up a self-managed super fund that can buy property. For example, here I've got here, buying a 2-bedroom unit in Cronulla. Most fund managers won't do that for you. Most financial planners looking after your personal superannuation won't do that for you. So what I find from my own experience, my own clients, the main reason they set up self-managed super funds is they like to take some of their superannuation money and invest in property. Everyone likes property. They like that for their retirement planning. So that's what most self-managed super funds are sort of set up for. So in the office here, we've probably got about 70 or 80 self-managed super funds for our clients. I would say more than half of them have been set up purely for buying investment properties. Now, a superannuation fund, it doesn't take much to exist. The main document that a self-managed super fund has is a trustee. I'll go through the details of that a little bit later. The other components are the members. Now, like I said, you can have up to 6 members. You can have 1 member or 6 members. Now, they don't need to be family members. They can be, related. They don't have to be related persons. That's all. The other important thing, and my other video really goes through this in a lot of detail, what the trustee of the superannuation fund basically looks after all the investments and runs the self-managed super fund. But there's rules regarding the members and the trustees need to be the same people. But the other video I did a few years ago talks about the trustees and the different types in a lot more detail. I'll go through it really briefly now. Basically saying there's 2 types of structures you can have. One is you can have an individual or individuals as trustees, and the other type is having a company as the trustee of the self-managed super fund. Now, with individuals, you need to have a minimum of 2. So I'll go through that in a little bit of detail. I think the main reason there is that the superannuation rules don't like having 1 trustee, because if that person dies, well, the whole problem we have of who owns the assets. So that's why if you want to go down the path of being an individual trustees, and most people go down that path mainly to save a little bit of money. So I'll go through later the setup costs, and there's a little bit of a savings by not having another company as the trustee. If you only have one member of the super fund, you need to have a company as the trustee. That's a rule because, I'll go through explain what companies that they basically don't die, so therefore they don't have that issue of only having one member and they passing away. The way it works, though, I go through this a lot more in the other video, is that the trustee is like the parent and the members are like the children. So the trustee has all the assets in their own name. So if a property is purchased in the self-managed super fund and there's two individuals, say Derek Nolan and Anita Nolan are the trustees of the self-managed super fund, and the super fund goes and buys a property, the actual name on the title of the property is Derek Nolan and Anita Nolan because they're the trustees of the super fund. It's not the name of the superannuation fund, it's the trustees. So Derek Nolan and Anita Nolan will own that property on behalf of the members of the superannuation fund, which happen to be Derek and Anita Nolan. So that's sort of how it works. Now, I don't particularly like individuals being trustees of the super fund because Derek and Nolan and Anita Nolan have got another life to live. They own other assets in their own name, and it gets a little bit confusing about who owns what. The other thing is that if you want to then add another member to the superannuation fund, say William or Richard, my two sons come and join the superannuation fund, well, we have to go and add those onto the title now. So it has to be Derek Nolan, Anita Nolan, William Nolan, and a Richard Nolan on the title of everything. We have to go and change the bank accounts and all the other assets. That's why it becomes quite difficult to have individuals as trustees, where companies, you don't need to have those problems. So that's what I'm saying. There's the ownership of all the assets of the fund are in the names of the individual trustees. So go back and watch the other video I did. I really go through that in a lot more detail. And basically, at the end of the day, hopefully talk most people out of becoming individual trustees of their superannuation fund and just paying the extra cost to have a company. Because that's the other type. The company is the trustee. You set that up with ASIC, and you can actually have a special superannuation trustee company. So the ongoing fees are a lot cheaper. The setup costs are slightly cheaper, but it's just easier to have a company. Although having a company, all the members then need to be a director of that company. So therefore, all the members now need to have a director ID before we can set up the company and things like that. But the great thing about this, though, is that if you have a self-managed super fund and the trustee is a company like 12 Proprietary Limited as trustee for the Nolan Superannuation Fund, the assets are in the name of 12 Proprietary Limited. So if we change the members and change the shareholders or directors of the company, the ownership doesn't change. It's still 12 Proprietary Limited owns that investment property. We don't need to add people or change people. Same with the bank accounts or anything like that. So it's a lot easier to administer by having a company. You change the directors of the company, but the actual ownership never changes. So it's a lot easier to administer. I did mention before that if you only got one member, though, you have to have a company. And most times I'm going to suggest to people that a company is the trustee of your super fund, and also a company that doesn't do anything else. I've had some people come along and say, listen, Derek, I've got this company that's running my business. Can it also be the trustee of my super fund? Well, there's nothing technically wrong with that, but you just don't do that. The other thing is, I've done videos on this before about bare trusts and borrowing money in superannuation funds. And what you'll find is that if you go down that path to borrow money in a super fund, the bank or the person lending you the money will pretty much insist that a company is the trustee of the superannuation fund. That's just the way it works. You'll also set up a bare trust with another company as the trustee of the bare trust, but definitely the self-managed super fund will have to have a company as the trustee. Just really quickly, a trustee is probably the most important document regarding setting up a self-managed super fund. And And it's really a legal document that covers the operations of the self-managed super fund. Now, they're fairly standard. The one we use in the office here is about 65 pages, and it really just covers the superannuation rules, the ATO rules, and all the other compliance issues that a self-managed super fund needs to do. So they're very stock standard. You don't need to sort of, change it too often. Most accountants, most lawyers have a pretty standard self-managed super fund trustee that you can use and review. But if you've already got one, make sure you read it one day. A lot of people just sign the last page, put in the file somewhere, or give it back to their accountant and never actually read it. You should read it one day. It takes you about an hour or so. The trust deed has all the rules in it. That's why I said if you read it, you probably know more about how the operations of a self-managed super fund will work then. The trustees basically sign it off, but all the rules are really just governing all the members and what you should do and the rules regarding running a self-managed super fund. Very stock standard. The compliance is there, and most of the time you don't need to change it. Like I said, with the members there, we talked about all the members. The main thing there, they can be up to 6 members. They don't have to be relatives of each other. And the main rule is that all superannuation members are also the trustees, or at least the directors of the trustee company. Every year, there's an annual audit that needs to be done, and your accountant or your lawyer can normally organise that for you. It's just a requirement. It has to be done every year. All right, so this is the actual steps you need to go through in setting up the self-managed super fund. So the first step, and I went through this slide in my other video, but I'm just going to go through a bit more detail today. The first thing you need to decide whether you're going to have an individual or a company as the trustee. Like I said, if you ask me, I'm going to say company trustee in most situations. To save a couple of dollars is really the only reason you would have an individual as the trustee. So I normally say get a company trustee. So therefore we need to set up a company first. And like I said, there's the ASIC will provide a special purpose company to be the trustee. The ongoing fees are much cheaper than having a normal company. Now, if you have a normal company already, you don't need to establish a brand new one. You can use that one. But I always recommend that that company is not doing anything else. It's not the trustee of your family trust. It's not running your business. It's not doing anything else. Its only purpose in life is to be the trustee of your self-managed superannuation fund. So if you need to set one up, you need to then appoint the members of the superannuation fund, or at least the initial members, as the directors of that company. So therefore we need a director ID from ASIC. So you need to have that information. Once you've got the company, or you set up a new company, then you can do the trust deed. Because on the trust deed, you need to mention who the trustee is. And of course, if the company doesn't exist, you can't do the trust deed. Now, all this normally happens, like when I set them up here, it happens straight away. Like you do the company, and then 2 minutes later, you're doing the trust deed. It's all the same sort of process. But the trustee does mention who the trustee is. That's the most important part of the trust deed. Once that is established, and what happens then is that the trust deed does need to be executed or signed by the trustees. So there's a process then. If we did in the office here, we would set up the company first, and obviously that needs to be all signed by the directors and set all up properly. And then it's the trustee, the same thing. Normally we give both those packages to our clients at the same time. We don't need to get them to come in and do the company one day and then trustee the next. It all goes in the one package, and it's all dated the same day. Because what happens is that trust deed then also needs to be signed, filed away. A copy needs to be given to the bank and other things like that. The step 4 then, and this all happens at the same time, is we need to apply for a tax file number and an ABN. So this is where it enters the world of the tax office. Up until then, the tax office didn't know it even existed. So a tax file number means you can lodge a tax return every year. An ABN, now this is a little bit confusing because an ABN traditionally used for businesses, Australian business number. But the tax office uses an ABN also in the compliance of self-managed superannuation funds. And every self-managed super fund must have an ABN because that shows it's a complying superannuation fund. So that's really important. So again, your accountant will do all those things. So step 2, step 3, and step 4 pretty much all happens the same day. So if someone came to me and said, Derek, I want a self-managed super fund. Can you set it up for me? They give me all the details. That can all be done in the same day. So at the end of the day, you'll have everything to sign and hopefully you'll have a tax file number and an ABN fairly straight away. Once that's all been signed, you can take that to your bank. Take a copy of the trust deed. Normally you need to have it certified because you're not going to give them the original one. So normally your accountant, JP or someone like that can just stamp it and then certify it. And you take that to your bank and say, I would like to open up a bank account in the name of this superannuation fund. Now, again, like I explained before, if the company is the trustee, the actual name of the bank account will be actually the company of the self-managed super fund. So it'll be 12 Proprietary Limited as trustee of the Nolan Family Super Fund. So you probably need a certificate of incorporation as well. Most banks will also ask for an ABN and a tax file number. It's not required, but if you don't provide that to the bank, they'll obviously withhold 47% tax and things like that. And if you've got a bank account already established for yourself with that bank, you probably don't need your ID and things like that because they'll check to make sure that you're the director of the company, and then you'll be the public officer, and they'll be able to open up a bank account for you without too much problems. And the same thing if you want to open up ComSec security accounts or crypto trading accounts and things like that, you'll need the same information. Copy of the trust deed, certified, certificate of incorporation, and off you go. And to me, that's when you've sort of got your self-managed super fund. When you've got a bank account and you go and put some money into it. You might just start with $10 in there just to open up the bank account. But the next thing then is you need to start putting some money into it. The next thing you need is an electronic service address, an ESA. Now, you normally get those from your accountant. There are ESA providers like the post office and things like that. It costs you about $50 or $60 a year or something like that. It's fairly small. So most of your, like the ones for us, we've got a pretty standard ESA. We don't charge our clients for it. Once they've got that though, whenever they want to put money into their superannuation fund, either from their employer or you want to roll over from another superannuation fund, you need to provide this ESA to whoever is putting the money in. Because what the ESA is all about is the tax office want to track everything that's going into superannuation funds, because that's what they do now. They make sure they know all the money is going to superannuation funds because of all the restrictions. Like there's restrictions on how much you put into superannuation funds, either concessional or non-concessional contributions and things like that. So they need to know all that. So you can't start moving money into a superannuation fund until you have an ESA. And most of the time, your accountant will provide you with that. Once you've got that, then you can start filling in your rollover form. So if you've got money with Australian Super or Aware Super or something like that, you start filling in the rollover form, because what they want there is the bank account details, the ABN of your superannuation fund, and an ESA. They're the three critical things you need on your rollover form and your bank account. So once you've got all those things, you can fill in your rollover form, send it off to Aware or Australian Super, and hopefully within 7-14 days, the money turns up in your bank account. Once that's happened, you're now in control of the money. So that's the sort of the step where you've actually got some money to invest now, and off you go to do your investment. Now, a lot of people, like I said, they're setting up because they want to buy an investment property. They might need to put more money in there themselves as non-concessional contributions, or they might have 2 or 3 different members and rolling money from different places. So it might take a while to get enough money in there to do something with it. So don't just let it sit there for a few months earning nothing. Make sure you get at least a high interest earning bank account and things like that. So once you're in there It's the ongoing requirements. And you're in charge. You're the trustee. So with the help of your accountant, you need to do your annual requirements, which is your annual tax return, financial statements, members' accounts. An audit needs to be done every year, which is independent of your accountant. They normally have someone that can help you. So they're all the steps. And each year, then those things need to be done. So they're the 8 steps of setting up a self-managed super fund. What you do with it then, you're in control. You can't really come and ask accountants for advice on how to invest money because we're not allowed to do that. But at least we can help you get the whole setup. Now, like I said, steps 2, 3, and 4 all get done the same day, pretty much. Step 5 is up to you to go and open up a bank account. Step 6 can be done by the accountant as well, but they'll be on. And then the step 7, it could take 7 days, could take up to 28 days. Some fund managers take that to roll the money over. All right, well, the cost of setting everything up. So the estimated cost of setting up a self-managed super fund with a company as the trustee is, well, this is what we charge, $2,720. Now, there'll be probably accountants out there charge a lot more than that. There'll probably be some accountants out there charge less than that. But what that includes is you get the setup of the company, including the ASIC fees paid to ASIC. It's about nearly $1,000 to set up a company now. The trustee is prepared, like I said, is fairly stock standard, but you need to have all that prepared properly. The application to the tax office for the tax file number and the ABN, a certified copy of the trust deed, so you can take off to the bank, and you get an ESA, the electronic service address, so you can make all the contributions. You'll need to give that to your employer before they can start putting your weekly or monthly superannuation contributions in, or your other fund managers to roll your money over, and all that obviously needs to be filed, and most of that will be kept at your accountant's office. So we've got a filing room out there full of all our companies and trusts and superannuation funds. So that's what you get for your setup cost, $2,720. A lot of that goes off to the ASIC for all the company side of it. So if you wanted to go with an individual trustee, the cost of a company, I think, is around $1,300, $1,400. So you could probably get half the setup costs if you didn't go with a company. But my recommendation is normally to have a company. Okay. Once you're off and running, then your estimated cost of your yearly compliance costs. Again, it can vary, but it's going to be somewhere between $2,000 to $3,000 a year. Depending on the size of your fund and how many transactions, but really with the compliance work that goes into a self-managed super fund now, including the audit, $2,000 is probably the minimum you can get away with. There might be some accountants out there doing it a little bit cheaper, and might be plenty more doing it more expensive than that. But that's sort of the range you need to expect on what it's going to cost you every year. So that obviously includes the yearly financial accounts that need to be done in proper format. Member statements, because if you've got multiple members, it needs to all be apportioned properly, and the contributions applied, and non-concessional, concessional, all that tracked. The tax return every year for the self-managed super fund. All the relevant minutes and member statements and trustee statements need to be done, and the auditing of the superannuation fund, which needs to be done by an independent person. So you're really looking at between $2,000 to $3,000 a year. The way we look at here, we have some clients here that just have a self-managed super fund with a couple of investments, maybe in investment property. So they're on the low side, around that $2,000, $2,200. Other ones have a lot of investments in crypto, multiple properties and stuff like that. So that could go up to $3,000, maybe even more than that, depending on how many transactions there are. So hopefully that gives you a good idea of what you're up for to go down the path of setting up a self-managed super fund, and then the annual yearly compliance costs. Now, if you go another step and you actually borrow money in a self-managed super fund, so I've done videos on this before where you need the whole bear trust arrangement and things like that. So there's extra costs on borrowing money. It can be quite expensive, but most people understand that if you want to borrow money in a self-managed super fund, it's going to be a little bit more expensive. because most of the big banks don't offer this service anymore. Like Westpac and NAB and Commonwealth Bank, they don't want to lend to self-managed super funds anymore. They just don't want to go there. So what you're dealing with is La Trobe and Resmac and Liberty Finance and other these third and fourth tier lenders, and their establishment fees are normally fairly high, $3,000 to $5,000. The interest rates are normally a couple of percent higher than the standard variable. So it does become a little bit expensive to start borrowing through a superannuation fund. You obviously need to do this bare trust arrangement, or what they call a limited recourse borrowing arrangement set up. You need another company to set that up. So it becomes quite expensive. You're looking at another $2,000 to $3,000 to set all that up. I did a video on this a while ago on what is a bare trust and how to set it all up. So go and have a look at that. But the cost of doing that as well, it's like the bare trust is going to cost you $1,320. That includes, that doesn't include the company. So like I said, most of the time, all banks will insist that the bare trust, the company is the trustee. Now, the good thing is, if you already got a company, you can use that, and you can have multiple bare trusts, because every property that the self-managed super fund buys needs to have a separate bare trust, but you can use the same trustee company. So if you've already got one, the cost of having set up a bare trust is $1,320. Well, that's at least what we charge. In addition to that, you have stamp duty on bare trusts. Not on the original trustee, there's no stamp duty on that, but with a bare trust, New South Wales $750, Victoria $200, and there's no stamp duty in other states. Like I said, you'll need to have a company as the trustee of the bare trust, so you're looking at another $1,400. That's what we charge. Like I said, other people might charge a little bit more than that, a little bit less than that. So look at the total cost then to set up another bare trust with a company is another $2,720. So well, that's what we charge. So it's pretty much the same as setting up a self-managed super fund with a company as the trustee and a bare trust. So it's going to pretty much double the price. So that's a pretty good indication of the costs that you're up for to get started and the process of setting up a self-managed super fund. Like I said, I did this video a while ago. I went into a lot of detail about the trustees and all the different components of the self-managed super fund. I just wanted to update this video today, just talk about the costs, because the costs have gone up significantly. And there's quite a range of prices out there. I just thought I'd let everyone know what we charge and give everyone a bit of an idea, because that's normally the next question people ask. Oh, this is great, Derry. Saw your video. What does it cost? So that's why I thought I'd do this video to let everyone know. So before you head off, there's a couple other videos I've done on superannuation. So make sure you go and check those out. And hopefully on my website or YouTube. There's plenty of other things I've done for small businesses and people looking at setting up superannuation funds. All right, I'll leave it there. Make sure you check out my website, www.12.com.au. And thanks for watching, and goodbye for now.